Hello, this is Ryan. Happy Saturday to you. It is November the 13th. That was an interesting week, needless to say, on the SPX this week. The overall markets gave away a lot, especially on Friday. I think a lot of people were anticipating a move up because of the beginning of POMO action. Um, I, for one, did think we would get a little bit of move to the upside, but it was outweighed by China, Europe, and a few other factors involved, but mainly China, worried about the possibility of them tightening up a little bit. And if China tightens up, then that throws POMO into a tailspin and could cause some major problems. So we'll see how that goes. But from a charts technical standpoint, I'm going to start with the SPX real quick. And this is a weekly view. There's a lot of lines on here, but let me go through it real quickly and show you what's happening. First, this long line here, this is a Fibonacci retracement on the weekly from the high that was way back in '07 now to the low we saw in early '09. You notice that's these orange dotted lines that go through here, the important ranges on the Fibonacci retracement. And you'll notice if we zoom in right here on the weekly that, and this is something I warned about and mentioned in some previous blogs, and I believe I may have even made a video on it, but at least on some blogs, that we hit it the previous week and stalled right at that resistance level, and this week we came right back off of it. So Fibonacci retracement, 38.2% is definitely resistance, is acting as resistance at this point. A couple other things to look at. We saw, well, we're currently still in an uptrend, right? From a weekly standpoint, this support line is holding. We pulled back on Friday, almost touched it, but we're still holding it. So from a technical standpoint, we're still in an uptrend. What we'll look for on the weekly is a drop below this level, so that will give us going into Monday probably below that 1192, maybe 1195 range. I'll look at it closely on the daily chart, but from a weekly standpoint, we are still in an uptrend. Notice we saw the same action happen a couple months ago. We hit resistance level here. We fell back, and then we really took it hard and fell strong down to, again, this Fibonacci. Notice the orange dotted line, Fibonacci retracement line, found support and came back. So the fibs are really working here and really dictating the direction. A lot of Fibonacci chop, through this orange dotted level. Again, these are weekly Fibonacci retracement patterns. The white is on the daily chart, basically pointing out this range. I'll show you on the daily chart in a second. So just focus on the orange dots at this point, the dotted line. So Fibonacci is really a strong indicator, and if we do fall through this trend line support, we may fall all the way back to the 1120 range, which is the Fibonacci support, as well as horizontal support on the weekly chart. One difference between this fall that we saw here and after this nice climb up this support level and this one is that this down day was accompanied by very heavy sell volume. If you look down here at the bottom, you notice the volume was tremendous, and then was followed up 2 days later with another very strong sell day. Friday, or last week, excuse me, the sell-off was there, but the volume was low. So, you know, there's still an argument that there was a pullback, there was a sell-off, but the volume wasn't enough to show that there was a lot of panic selling, if you will, or a lot of people looking to move out of positions. Maybe it was more just profit taking for those of us who have done well for the week. So look for this level of support. Not a lot of panic in it yet. We got above the Bollinger Bands the week previous, so we needed to get back into